Hello guys, welcome back to What's Trending Crypto. To find out about future update on trends, make sure to hit the subscription notifications bell. Okay. Let's talk about what's trending today.
The Securities and Exchange Commission, SEC, has been using some tactics to delay the process in the lawsuit against Ripple. Interestingly, the court has rejected SEC's this policy to slow down the procedure. In a one-word order, District Judge Torres denied the SEC's motion to file a certiorari in support of its motion to strike. This move has sent SEC's motion to file certiorari denied. The lawsuit against Ripple has seen SEC using delay tactics to slow down proceedings and bringing up some confusing arguments to support it. SEC's requested the court to consider the certiorari so that the agency can present highly relevant recent authority that directly refutes Ripple's arguments in its certiorari. It added the grant of permission to respond to Ripple's arguments made for the first time in its certiorari. According to the documents, Ripple lawyers in the first certiorari mentioned that this is the very first case in which the agency has ever brought an enforcement action against a company or its individual executives overselling an established digital asset. To which SEC in its certiorari brought up the motion to strike, citing SEC versus LBRY decision in which New Hampshire federal judge granted judgment on the pleadings on an unrelated selective enforcement defense. Is SEC trying to delay the verdict? This is for sure that Judge Annalisa Torres has also got sick with the SEC's contradicting arguments and notices. One day SEC asks the court to consider Hinman's speech as his personal view, on the other day the commission files the notice to reconsider the speeches as a public guidance. It is being believed that failure to attach a date and signature to the application was just another ploy to delay the lawsuit further. The case filed by the SEC against Ripple has already much delay. It has been dragged for months while XRP holders have seen some of the unfavorable price movement of the coin. In other news, the U.S. Securities and Exchange Commission, SEC, has been in the news regarding a legal tussle with Ripple. Now, Tesla chief Elon Musk has also planned to land into the legal battle with the SEC. Musk dropped some straight signals regarding his plans against the commission. It looks like Ripple is not alone in the fight against SEC. Musk and Tesla are already into a long legal battle against the SEC. This time, world's richest man admitted that he is building a case against the federal agency to boost his camps. I didn't start it, but will end it. A Twitter user dropped his random theory regarding Elon ramping up with evidence to go against SEC publicly. To this, Elon himself confirmed that yes, this is exactly what I've been doing. Elon Musk and Tesla are both ready and confident to go against the SEC, as he expressed that he intends to finish it this time. Elon Musk has been unpredictable every time. Recently he, via his attorney, accused the SEC of leaking information about a federal investigation to retaliate for his public criticism. SEC and Musk have been into some intense battle. Back in 2018, SEC filed a case against Elon over his funding secured comment. To counter this, Musk went on a mission against the SEC. By calling the official's name, he claimed that the agency was working for people shorting the electric automaker. However, it didn't end Elon's way, as they both reached a settlement. Elon agreed to step down as the chairman of the board, while both Musk and Tesla had to each pay $20 million in fines. This settlement helped Elon only as he doesn't want Tesla to pay for his comments, an issue with the commission, nor he can pay directly for the electric automaker's part of the fine. He then went on to buy $20 million worth of shares from Tesla, and ended up with 71,000 additional Tesla shares. SEC probing Elon and Kimball Musk for insider trading. As per new reports, the ongoing battle between Elon Musk and SEC is getting ugly, as SEC is probing Elon and his brother for trading Tesla shares recently. SEC is looking into Elon Musk and his brother for insider trading with respect to selling Tesla shares recently. Elon did a Twitter poll prior to selling his 10% stake in Tesla, and he has informed SEC that Kimball knew nothing about it beforehand. Prior to this, SEC once fined Elon Musk $20 million for this comment about SEC's involvement in heavy shorting of Tesla stock. In other news, $510 million in collateral liquidations will trigger at this Ethereum. The Ethereum blockchain continues to face issues of high gas fees. Nansen, an Ethereum gas fee tracking platform, revealed that Ethereum gas fees have been on the rise. On the day, median gas fees reached 250 GWE, over $9. Ethereum investors cite incoming risks. The gas fee has been increasing on the back of an increased number of transactions on the Ethereum blockchain. The biggest gas fee spenders in the last 24 hours have been DeFi crypto lending protocols. Over 18% of the spent gas fees originated from Uniswap, while 1inch and AAVE accounted for 3.43% and 3.2% of spent gas fees respectively. However, the current gas fees seem to be cheaper than previous months in dollar terms. In December, the median gas fee was around $22 according to data from BitInfoCharts. In January as well, gas costs were on average around $15 per transaction. Meanwhile, the network plans to completely alleviate volatile gas fees with the arrival of ETH 2.0. The network expects that the migration to proof of stake later this year will bring more predictable gas fees. Ethereum, ETH, continues trading downward. The price of ETH has been shed over $700 in the last 2 weeks, falling minus 24.8%. On the day, Ether is changing hands at around $2,300, down minus 13.11% at the time of writing. The current price is an over 50% drawdown from the ETH all-time highs. Many market pundits, including the founder of Ethereum, Vitalik Buterin, have warned that the entire crypto market may have to bear a prolonged bear market. Bloomberg's analysts also previously warned that the risk exists that the price of Ethereum could test levels around $1,700. However, there are still bullish predictions for ETH. A panel of fintech specialists at Finders, a crypto comparison site, predict that 2022 could see an ETH price of $5,000. In other trends, we found that gold up 7%, Bitcoin down 25%. Is Bitcoin losing its shine as safe haven asset? In contrast, gold jumped more than 2% as investors piled into the age-old safe haven. The move highlights the growing rift between Bitcoin and the yellow metal this year. While gold prices have risen about 8%, the world's largest cryptocurrency has shed nearly a third of its value, data from goldprice.org shows. The decline has challenged earlier notions of Bitcoin being a viable gold alternative, considering its decentralized nature and general detachment from the broader financial space. These aspects of the currency were widely lauded during Bitcoin's stellar rally last year, where it surged to nearly $70,000. But while the rally was indeed steep, a large portion of it was backed by institutional interest in the token. The influx of big investment houses has seen Bitcoin behave more like conventional markets, specifically stocks. Losses in Bitcoin this year have mirrored those in the tech-heavy Nasdaq index, which is down about 22%. Gold the preferred inflation hedge? Fears of rising inflation had also seen markets tout Bitcoin as a potential inflation hedge, i.e., returns on the currency would be consistently above annual inflation rates. But with the token trading down for the year, such a notion seems rendered moot. Gold, on the other hand, is trading close to the level of annual inflation in the U.S., which had surged by 7.5% in January. The reading had rattled crypto markets earlier in February, while supporting gold. Bitcoin's recent sensitivity to inflation also makes it averse to rising interest rates. A bulk of the token's decline this year has been driven by hawkish signals from the Federal Reserve, which has planned a rate hike in March. Traders have been quick to pick up this trend. Prominent gold bull Peter Schiff has repeatedly downplayed the Bitcoin-gold relation on Twitter. Still, considering Bitcoin has moved in lockstep with stock markets this year, it is likely that a recovery in the sector will spill over to crypto.
Thank you for your time, and make sure hit the subscribe button for future update on what's trending.